Hey everyone, it's Zach back with a new mortgage video. Hope you're all having a happy Tuesday. If this is your first time seeing one of my videos, welcome to my channel. If you're a returning viewer, welcome back, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So, didn't get a chance yesterday to shoot my Monday market update, so I'm going to do kind of a market update today, focusing mainly on a couple positive things that came out of last week and this week. The one big scheduled thing that is happening, which is tomorrow, the Federal Reserve's rate decision, and more specifically, Jerome Powell's comments afterwards, and why I think that is even more than normally extremely important and will likely be a big market mover. So last week, we had another up and down week in terms of mortgage rate movement, where basically the first 3 days of the week, mortgage rates got better, and then the last two, they got worse. But what was really a good sign is that we had kind of a more logical cause and effect than we have been having really at any point since April 2nd, the start of these tariffs. So let's start on Wednesday. We had a lot of data that came out Wednesday. The GDP for the first quarter, which came in a lot lower than expected, negative 0.3, was expected to be positive 0.4. We also had PCE inflation, the Fed's preferred metric for inflation. That came in a little bit higher than expected. But then ADP employment, which measures job availability and job creation for private companies, that came in a lot lower than expected. And I think that was the thing the market latched onto the most. GDP, even though it came in a lot lower than expected, it was largely due to this very dramatic difference between imports and exports, and that's not likely a sustainable thing. That was really, I think, perceived as a one-time occurrence as companies prep for these tariffs. As I've mentioned in past videos, there's a lot of front loading of purchases going on, and that's really all that showed. However, ADP employment, I think, is a direct reaction, and this was one of the first jobs reports that we saw that takes into account the tariffs, as this was a report for the month of April. So mortgage rates, as you would have expected in a normal environment, got better. And we've had times recently where ADP came in a lot lower than expected and mortgage rates got worse. So this was a good sign. And then on Friday, basically the reverse happened, where you had non-farm payrolls, which measures job availability and job growth in both public and government jobs. That came in dramatically higher than expected. And it was really driven more by public job creation, as the government specific jobs are actually declining due to the new administration's focus on cutting back on government jobs. Then in addition to that, you also had unemployment rate that came in as expected, same as last month. So that didn't really factor in much. But the fact that non-farm payrolls came in so much higher than expected, showing good job growth, that led to a worsening of mortgage rates. So even though you don't want mortgage rates getting worse, generally speaking, I do think the overall picture that we had a more normal relationship between jobs data and mortgage rates than we have been seeing should be looked upon as a positive thing. Now, this week, there's not really any major ticket items. I will say that initial jobless claims, which usually kind of feeds into unemployment rate for the following month, that ticked up last week. So that's going to be one that I'm going to be following a little bit more than usual to see if that trend continues. But the big ticket item is tomorrow we have the Fed's rate announcement. And as has been the case really every Fed meeting since September, the decision is basically a foregone conclusion. The Fed is going to maintain their current interest rates. And What's really going to matter much more than the decision itself is Jerome Powell's comments afterwards. Now, I've said that before just about every Fed meeting, again, outside of that September meeting last year, which is a little bit of an unusual one. But in this case, I do think it's even more impactful because we're in this place where there is so much volatility and there's so much that the markets seem to be grasping onto, trying to get a grasp of what should matter and what shouldn't. That is not usually the case. Normally, inflation and job reports are the end-all be-all for mortgage rates, for bonds prices, and that is not currently the case. So what Jerome Powell talks about and focuses on, I think, will really set the tone for what reports moving forward are going to be the most impactful. And it may not really change anything. He may say that they are still focused on tariffs and what ultimately will be the final end tariffs policy for all these different countries. And if that is the case, then we're kind of in the same spot that we've been at. But if he is more focused on jobs than inflation, which I could see, I think the job market can be a little quicker to respond to news, to policy changes than inflation. A lot of elements of inflation, especially things like housing, shelter costs, it takes a year or more before those numbers catch up to what is happening. Whereas if a company sees some kind of movement, sees significant news, they can immediately pause hiring or start laying off employees. So I'll be curious to see if he makes some kind of signal of that, or if it's more of just a wait and see approach. I'm sure people are going to ask him about Trump threatening to fire him again, and it'll be interesting to see when he inevitably maintains current interest rates and does not cut them, as Trump has been clamoring for him to do. How does Trump react to that? How do the markets react to Trump's reaction? All of those could also play a part. But as always, if you have any questions or comments, shoot them below or feel free to call, text, or email me. But thanks for tuning into this video, and I will see you next time.